Hello, good morning, good afternoon, and good evening, depending on the time you are watching this video. So in this video, I want to briefly talk about few trades I caught on usdjpy this week that just ended yesterday, right? So you all know the strategy that I trade. I trade SLK. I trade structure, liquidity, and key levels. I'm basically looking out for key levels that are closer to liquidity. Then I'm subjecting my key level and liquidity to my structure overall. So that is what I trade. So my job in this particular video, my mission is to help you understand. While I will be doing a recap of few of the trades I take, I'll also help you understand how to build buyers using key levels, and number two, I'll teach you my confirmation entry that I used in this week that just ended, this trading week that just ended, right? So without wasting much time, let me go straight into how to build buyers using key levels, how I actually built my buyers this week using key levels, right? So first of all, let me talk about the structure part. You need to align both your key levels and your liquidity towards structure. You need to understand what price is doing. Is price uptrending? Is price downtrending? Or is price consolidating? If price is uptrending, you need to be taking buys. You will know that all what you'll be doing is more of buys and less of sells, because price is uptrending. If price is downtrending, you are taking more of sells and less of buys. If price is consolidating, it's best for you to stay out of the market, right? And two things you need to understand when you are trading structure, right? Two things you need to understand when trading structure. Number one is you need to understand the face of the market, right? You need to understand the face of the market. The first one is to understand whether price is uptrending or downtrending. I talked about that. Then the second one is to understand the face of the market. Is price in a continuation or reversal phase? That is going to help you a lot while you are trading structure, liquidity, and key level. All right, let's just go quickly on how you can build buyers, or how I built my buyers for this week, and how you can also use these, incorporate these into your own structure, and also to be able to build buyers using key levels. All right, for instance, let's say I come to the market. Okay, first of all, you need to understand that whenever you are building buyers, right, for every new month that opens, like let's say September now, or let's say October closes, then you then came to the market, you want to start analyzing, or you want to build your buyers. Since October has closed, and after October is November, right? So as November candle is opening, you need to start building your buyers from the monthly time frame, because that previous month has closed and a new month has opened. So for every new week, you need to start building your buyers from the weekly time frame. For every new day, or every single day, you need to start building your buyers from the daily time frame. For every 4 hours candle that closes and opens, you need to start building your buyers from the 4 hours, right, candle. I hope you understand what I'm saying. Okay, let's take for instance, I'm trying to build my buyers from the weekly time frame, right? I'm trying to build my buyers from the weekly time frame. We have 3 types of key levels. I talked about that in my previous video. The first key level we have is the A-shaped key level that is used for buys. The second key level is the A-shaped key level used for sells, V-shaped key level used for buys, then open-closed key levels, which are of 2 types, which is the bullish open close and the bearish open close. Bullish open close key level is used for buys. Bearish open close key level is used for sells. but I am not talking about key levels in this video. I'm just trying to show you few trades I took on USDJPY and the confirmation entries that I used while taking this trade, right? So for instance, I want to build my bias from the weekly time frame. I came into the charts. I want to build my bias from the weekly time frame. Whenever you want to build your bias from the weekly time frame, the first thing you need to see from the weekly time frame is you need to spot out your key level. In this case, we'll be using an A-shaped key level that is used for sales. All right, for instance, you spotted your A-shaped key level, right? Then you mark out your key level, which is your A-shaped key level. You mark your A-shaped key level, right? Then what are you expecting? After you've spotted out your A-shaped key level, you are expecting price to trade in the direction of this key level, right? You're expecting price to trade into this key level and close below this key level if you are looking for sales. So once price trades into this key level and closes below this key level, you started building your bearish bias. Price trades into this key level, right, and closes below. It shows that price is actually rejecting this key level and price is ready to go bearish. But this is not the only confirmation that we are using. It's only showing that the weekly time frame is bearish, but the daily is not yet bearish. The 4 hours is not yet bearish, because if you want to confirm bearishness for that particular week or for that particular month, first of all, you need to see a rejection and a close. As much as rejection is important, once that candle rejecting from that particular key level has not closed, it is not confirmed yet. It is not confirmed until you see a closure. There must be a rejection and a closure from that particular key level. Are you getting it? So the weekly, you want, when you are building your bias from the weekly time frame, you need to see a rejection from the weekly time frame and a closure, a candle closure below that particular weekly time frame. Then what is the next step you need to take? You need to drop one time frame lower, and one time frame lower is the daily time frame. You drop one time frame lower to the daily time frame. What are you looking out for in the daily time frame? Two things is what you are looking out for. Number one is either you see number one or you see number two. Number one is either you see a sweep of liquidity. After you've seen this on the weekly time frame, you then drop one time frame lower to the daily time frame. It's either you see a sweep of liquidity and a break of structure or a breakout. You are going to see something like this: a sweep of liquidity. Price sweeps this liquidity, then breaks structure, right? Or you are going to see the most recent breakout. So it's either you see price on the daily time frame, price sweeps liquidity, right, and breaks structure. A sweep and a break. A sweep and a break. It's either you see sweep and break, or you see price just create the most recent breakout on the daily time frame. So if you see this, you are correct. That's if you see a sweep and a break, you are correct. If you see only a breakout, you are still correct. It's either you see one or you see two. Are you getting it now? So this has confirmed that weekly is bearish and daily is also bearish. So once you have seen this two time frame showing that price is turning bearish or price has turned bearish, you need to wait for 4 hours time frame to also confirm bearishness. Two things you are also looking out for in the 4 hours time frame is that you are also looking out for sweep and break of structure or the most recent breakout. The same thing we saw on the daily time frame. You are looking for sweep of liquidity and a break of structure to the downside, or you are looking out for what? The most recent breakout of price to the downside. So once you've confirmed this on the 4 hours, it is now telling us that 4 hours is bearish as much as 1 day time frame is bearish, and also 1 week time frame is bearish. So once these 3 time frames aligns, and they are now telling you that its price is about to go down, price is about to turn bearish, or price has turned bearish, then you can now start selling, start looking for some key levels, valid key levels that has liquidity closer to them, then start taking shots, start melting price to the downside. So this was how I was able to incorporate these for the week, and I was able to catch some few trades. So this is how I build my bias. This is not a bias video, that's why I will not be talking much. I will not be going into much more details, right? So this was how I was able to build my bias on usdjpy for the week, right? So let's go on to the chart and let me show you some of the few trades I caught this week. All right, so going to the chart now, the first thing I saw the moment I came to the chart, the first thing I saw was an A-shaped key level. The first thing, all right, the first thing I saw when I came to the chart this previous week that just closed was that I saw price rejected, just as I taught you how you can build your bias. I said first thing, you need to see price reject from an A-shaped key level, or from a V-shaped key level, or from an open close key level. It depends on the direction of the market, right? So it depends on the direction of the market direction, right? So if you go to the line chart, if I go to the line chart, you see where price actually rejected and closed from. You see that price, this is an A-shaped key level, right? This is an A-shaped key level, this is another one, but let's use this. This is an A-shaped key level. Price formed 2 A-shaped key level, right? So that's the line chart. We've marked the A-shaped key level, right? You see it. Are you seeing it now? So price actually came to this particular A-shaped key level. Price came to this A-shaped key level. Price came to this A-shaped key level, rejected from that A-shaped key level, then closed below. Number 1 has been met. Number 1 criteria has been met. I said when building your bias, you need to see a rejection from a particular key level and a closure, candle rejection and candle closure. Number 1 criteria has been met. Number 2, drop down to 1 time frame lower. Drop 1 time frame lower, right? And 1 time frame lower from the weekly time frame is the daily time frame. We drop 1 time frame lower to the daily time frame, right? This was where price rejected from. Let me delete this. This was where price rejected from. Price rejected from a weekly key level. Even from the daily, it's still showing that price rejected from that particular key level. Then I said if you drop 1 time frame lower, what should you be expecting when you drop 1 time frame lower? I told you that you should be expecting 2 things. Number 1, a sweep of liquidity and a break of structure, or most recent breakout to the downside. But if you look closely here, if you look closely, after price rejected from a weekly key level, from a weekly A-shaped key level, after price rejected, you could see that there was no breakout except for this break that occurred here. But we are not talking about this. There was no breakout at this particular place, but there was no sweep of liquidity and break of structure, and there was no breakout. But what did you see? What did we see? We also saw that daily gave us a rejection and closure. That is from this particular open close key level, bullish open close, that got disrespected with this impulsive bearish candle, right? Price came back to this open close, rejected from the open close and closed below. Context. That's what we are having now. It depends on which time frame you are building your bias. So from the weekly, we saw rejection from a weekly key level and closure. Same thing, 1 day time frame is telling us. 1 day time frame is showing us what? Sweep. Sorry, no sweep. It's showing us rejection from an open close, which is a key level, an open close key level, and what? A rejection. Are you getting it? Rejection. So price has rejected from a daily key level and closed below. What do you need to do now? Once you've seen something like that, you need to drop 1 time frame lower again. So if you drop 1 time frame lower, it's going to be the 4 hours time frame, right? So if we drop to the 4 hours time frame, there was something interesting price did, right? Price did something very, very interesting. If we go to the line chart, we are going to see it. What did price do? What did price do on the 4 hours time frame? As it was rejecting, price swept this high. There was a sweep of liquidity at the 4 hours time frame. Meanwhile, at the weekly and at the daily, it was showing rejection and closure. But at the 4 hours, there was a sweep of liquidity at this high, and there was a break. There was a break of structure at this particular place. There was a break of structure at this particular. This was a V-shaped key level, but it got disrespected by an impulsive move. Let's go back to the candle chart. So you could see that price swept liquidity at this high, then broke structure to the downside, right? What did price do when it broke structure? Take note, this was acting as a liquidity. This was acting as liquidity, right? This was acting as liquidity. What did price do? Price swept that liquidity, tapped into this V-shaped key level that is now disrespected by an impulsive move, and price what? Melted to the downside. It was a wonderful sell indeed. Price melted. So if you are an aggressive trader, you will be able to take this particular trade, perhaps maybe putting your entry at this level. Your entry will be at that level. Your stop loss will be a little bit above this high. Maybe 10 pips is okay, right? Then your take profit will either be at this low or at this particular level here, this A-shaped key level that is inside an imbalance, right? We also saw that price reacted from there. That was a turning point for price. That was a turning point for price, right? So if you're an aggressive trader, you'll be able to what? Catch this particular trade, right? You'll be able to catch this trade and you get up to like 14 arrow. If you leverage these on your MT5, you'll be in for a lot of cash. But this is not what I am going to be teaching you. I want to teach you the confirmation entry I used for this, because I actually didn't catch this trade at this particular break of structure, this 4 hours break of structure. No, I didn't catch it from that particular place. Although I saw it was plain, like I saw it. Price, everything price did here, I was looking at it live. It happened live in my face. I saw everything, but I was just waiting for price to what? Just tap into the skill level and just close below. And that was what price did before I used my confirmation entry, right? What's the confirmation entry that I use? This is the confirmation entry that I use. This is how to use the confirmation entry. The confirmation entry that I used was that I want to see price form a single candle. So something more like this. I want to see price form a single candle like this. A candle that has high. I know every candle has high and lows, right? So I want to see price form a single candle like this. Then I want to see price, if it's a sell, like if it's a bearish scenario, I want to see price sweep the high of this candle and close below it. Like I want to see price sweep the high of this candle, then close below it. So I want to see price do something like this. want to see price sweep the high of this candle. That's this second candle sweeping the high. Then I want to expect the third candle to react from this particular A shape, then go on to take the low of this candle. That's the confirmation, one of the confirmation entries that I use. This is one of the confirmation entry amongst others that I use, right? So I want to see price come to this A-shaped key level, right? React from that A-shaped key level, then go on to what? Take out the low of the first candle. So this is basically what I am looking for my confirmation entry. I want to see price take out the high while the low is still remaining, or while the low is still standing. Take note, the low must still be standing. After price takes out this high, the low, this second candle, after it takes out this high, this low must still be standing, because if the low is taken, then it is no longer valid for my confirmation, right? So I want to see price, the second candle take out this high while the low still remains. Then the third candle taps into this A-shape key level. If it's for a bearish scenario, then what? Just sponsor the sales to go take out this low. So that's basically what I'm looking for my confirmations, and that is what I saw, right? That is what I saw. That was what I was waiting for. That was on Monday, I guess. I was waiting for that, and it happened, right? So let's delete this. If you were taking aggressive entry, this would have been a nice trade. But what did price do here? Price swept this liquidity. This is acting as liquidity, and this high also is acting as a liquidity, right? What did price do? Price swept this high. Price tapped. Why price tapped here? Why price was approaching this level? It swept this high and also swept this other high, right? So this is the current high we'll be using. Price swept this particular high, then went on to go trigger a V-shaped key level that got disrespected. Then price closed below. So what's the idea behind this? You need to know that this is CRT. This confirmation is just like CRT, candle range theory. We are expecting the first candle to be swept by the second. While the second has swept the first candle, then we expect the low of the first candle to still be standing, right? So the third candle, we are expecting it to come back to that particular key level, A-shaped key level or V-shaped key level, depending on the direction of the market. Then we are expecting to melt price to the downside. That's what price did. So once immediately price tapped into this key level here, I waited for 4 hours to close. Then I saw this, that price swept this high. Then there was an A-shaped key level that was standing here. A-shaped key level that was standing, right? So that was where my entry was. So I entered from this particular A-shaped key level. Stop loss was a little bit above this high, let's say 10 pips, right? Then my take profit, I won't lie, my take profit was here. My take profit was at this particular place, right? And my stop loss was not even 10 pips, but I just did it 10 pips. My stop loss was around 8 pips. Then my take profits was around this particular place, right? But since you already know the direction of the market, this is going to be where your take profits is. You are going to place your take profits, because this is an A-shaped key level that has imbalance, right? So you are going to place your take profit at this particular place. You see, that's a 12RR trade. This was the first entry. But it actually didn't hit take profit. It hit take profit on Tuesday. I got another entry on Tuesday. This particular trade triggered on Monday, if I'm not mistaken. It triggered on Monday, right? It triggered on Monday. You can see it, Monday. That was when it triggered. Then how did I catch my second entry? This was how I caught the second one. This was, if you look at the left, you will see this particular level here. This is an A-shaped key level that sponsored these small sales to the downside, got disrespected multiple times. Then what did price do? It's also a QMR, a QM level. This is a QM level. So what did I see here from the 4 hours time frame? I saw price came to that particular level. I saw price came to this level and what rejected. I told you, candle rejection and closure is very, very important. So when price was rejecting from that level, I actually marked that level down and I said that was the level I was going to focus on once I get a closure from the 4 hours time frame, and that was exactly what I got. Okay, before then you could see that price broke to the downside. There was a breakout price did to the downside. There was a breakout here confirming that this particular sell is going to hold. There was a breakout at this particular level. There was a breakout here. When we go to our line charts, we are going to see it. You see, there was a breakout confirming that this sell, that price is going bearish. This sell is actually going to hold. There was a breakout here. So after price gave us a breakout, take note, price already gave us this QM before this breakout. There was this QM level before this breakout occurred. So then price now came to this QM level, rejected from that QM level, then closed. Immediately I saw this, I went one time frame lower. Just as I used to preach to you how I build my bias. I went one time frame lower. On the 2 hours time frame, you will see that particular level I marked was an open close level, a bearish open close that got disrespected multiple times, right? So that is what it is on the 2 hours time frame. What did you see? What's the important thing you are seeing here? What are you seeing here? As price approached this level, what did price do? Price swept this particular single candle liquidity. It swept this high. That has a confirmation for us. It swept this high. And what did I tell you? That whenever you see something like this closer to a key level, take note, it must happen close to a key level and price must have tapped that key level. Then you drop one time frame lower to look for this confirmation. What did you see here? Price swept the high of this candle, tapped into this key level and closed below. Take note, once you see a tap and a close, price tapped into this key level, and what do you see price do? Price what? Closed below. The next thing for you to do was for you to just place your entry from this particular level here. Just as I've explained to you, place your entry at that particular level. Then what did price do? We saw price sponsored sales to the downside. So that was the second entry I took on USDJPY, right? So I saw price came back to this level, right? And sponsored sales. My SL was just a little bit above here. My SL was around 7 pips stop loss, right? Then my TP altogether for this first one and the second one, my TP was actually here. But since you already know where price is going, you place your TP at this particular level. So the first one gave us 12R, the second one gave us 14R. That was a wonderful trade. It was really, really a wonderful trade. You could see how I used this confirmation entry. Like I'm aligning everything, right? I'm aligning everything to structure. I'm aligning everything with my key level. I'm aligning everything with the storyline. Price tells me that it is going to be bearish. Then I'm actually following what price is telling me. Right? So I'm following what my storyline tells me that it's doing. If my bias is telling me that price is going to be bullish, then once I've seen everything on the weekly time frame, on the daily time frame, and on the 4-hour time frame, I will just be moving in the direction of what my bias tells me to do, right? So the last entry, or should I say the second to the last, right? The second to the last happened, let's say, on the 1-hour time frame. Yeah, that one happened on the 1-hour time frame. Something sweet happened here. what happened? Immediately price broke out. Immediately there was a breakout from the daily time frame. Yeah, there was a breakout from the daily time frame. You could see that price actually tapped this level with a wick and dropped. But I wouldn't have been able to take this particular trade because, right, I wouldn't have been able to take it. So after the breakout of that particular level, we saw that price came to this particular open close. There was an open close here. Price formed an open close key level here. There was an open close key level here. Then as immediately price tapped that open close key level, it rejected and it closed below. Price rejected and closed below that open close key level. Then once you see a rejection and a close below that open close, you move one time frame lower. If I move one time frame lower, it's going to be my 30 minutes time frame. So once I move to my 30 minutes time frame, what are you seeing here? Something sweet, something delicious, right? So even as price tapped in, right, as price was tapping in, it swept liquidity. I don't know whether you are seeing what I'm saying. Price swept this single candle liquidity from the high of this candle. It swept the liquidity from the high of this candle, then swept liquidity from the high of this candle. As it swept liquidity from the high, it's somehow, then it formed an A-shaped key level at this particular place. An A-shaped key level. You could see that that was where, and that was what sponsored sales, the third sales to the downside. It's sponsored, I'm sorry, let me redo this. It sponsored sales to the downside. So my entry is actually going to be from this particular A-shape key level, right? It's going to be from this A-shape key level. Then stop loss a little bit above that high. TP is going to be the same level. Can you see consecutive sales that was caught on this pair on USDJPY? Can you see how sweet it is, right? So that's how sweet it is once you know how to build bias and how to actually enter trades. Which confirmation are you entering aggressively, or are you using confirmation entries? For me, I like to use confirmation entries because it saves me from a lot of losses. Are you getting it? Sometimes I will get the direction of the market, but if you don't use confirmation entries, sometimes price tends to pierce your stop loss, then go straight directly to your TP. That's because you didn't use confirmation entries. Take note, you can still use confirmation entries and still be taken out, but it is very, very good for you to still enter the market using confirmation entry, not just entering the market aggressively, right? There was something that price did from I guess that was the last entry. Price did something. What did you see price do? From the 4 hours time frame, we saw that price broke out here. Price broke out here. There was a breakout from the 4 hours time frame here, right? After that breakout, we saw that price actually rejected. Let me use this. Price rejected. Price tapped that particular A-shaped key level. That was an A-shaped key level. Price tapped that A-shaped key level. Then what? Rejected and closed. It swept liquidity here too. There was a sweep of liquidity here, right? Guess what? Price was supposed to come back up here and react, but it didn't come here to react. But there was actually something. If we drop one time frame lower, you'll see why price reacted from. You'll see something, right? What do you see here? This particular level here, what do you see? You saw that this is a topic for another day, or this is a confirmation entry for another day. Price used this particular open close, sweeping this single candle liquidity, swept this liquidity here, then what? Use this particular open close. So if you want to enter this particular trade, your entry is going to be from here, then your stop loss a little bit above that level. Take profit going to be this level here. The reason why I put my take profit there was because you already know that price is reacting from this key level here, this 4 hours key level here, this 4 hours key level. We already saw that price was reacting from there. Price has reacted and closed above. Price reacted from there and closed above. So you'll be very, very careful with your stop loss, with your take profit and your stop loss. For instance, let's say we put our take profit here, would have been taken out. You see it would have been taken out. So it is very, very important for you to understand and know where price is reacting and has rejected from. So putting our take profit here at this particular level would have given us an 8.6 arrow, and that would have been a very, very wonderful trade. So that's how I approach the market using directional bias, and also enter the market using this my simple confirmation entry. I hope you actually watch till the end, and I hope to see you at the next session. I still remain Jeytrades. See you and God bless you. See you later rather.